Does it seem everywhere you turn, people are advertising their services and it's really confusing to pick out who to use? And if you're a first-time home buyer, it's even more difficult because all this stuff is new. So one of the biggest things we're going to talk about today is finding your financer. Now, one of the things that you have to understand is your credit has to be ran. Once you find out which direct lender you want to go through, then go ahead and have your credit ran. To get your approval, you're going to need things like your W-2s, your 1040s, at least 2 years of those. You're going to have bank statements, 3 months of them, 30 days paycheck stubs. If the husband is only wanting on the loan, you got to get the wife's credit ran too, because they want to see the debt since you guys are combined. So you need to get all these items together before you even call your lender up, because it's one of the first things they're going to ask for in the first place. So W-2s, 1040s, 3 months bank statements, and then your 30 days paycheck stubs. And of course, don't forget your Social Security card. They're going to have to make a copy of it, your driver's license. Just make sure you have all your stuff done before you call one of these guys up. If your credit is bad, take some time to work on it. And you know what? Some lenders you go to, they could say, hey, you're not approved, but in reality, you're approved through another lender. For example, this one lender could have 620 credit score minimum, whereas another could have 550. And that first lender could say, oh no, you're not approved, you can't get it, blah, 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 let's fix your credit. But what they're really saying is you are not approved through them. You could be easily approved through someone else. So just make sure before you even run your credit, before you even give any of your financial information, that you see what their guidelines for the loans are to begin with. Pre-qualifications are not worth anything anymore. I could write up a pre-qualification if I wanted to. So banks know that, sellers know that, they want the pre-approval. Pre-approval consists of you giving the financer all your information, they actually run the numbers through, and you're actually approved up to a certain amount. That is more solid than the pre-qualifications, and that's why they're taking them. Now, some of the things I want you guys to understand is quit running around and searching for that perfect rate. That perfect rate, everybody's got it. And the thing is most of the loans get sold on the stock market anyway. So it really doesn't matter which bank you can go to. Just go to anyone that's going to get it done. And if you want a lower rate, then buy down the points. Or you can maybe do a streamlined refinance later when the interest rate gets lower. But just quit searching for that perfect rate, because everyone sees almost exactly the same rates, and they get sold on the stock market anyway. You might end up with a Bank of America loan, but next thing you know, Bank of the West might have it. Okay, so it really doesn't matter as much as a financial institution, than it matters than who is going to get your loan done quick. Now, how much of a home can you afford? Well, why don't you see what fits in your budget? You might be able to get a $400,000 loan, but your budget only allows for maybe what a $200,000 house payment could give you. So just make sure you're looking at what goes in your budget, not how much you can get approved for it. So I hope you enjoyed it, and until next time.